Good evening students. Today we are going to discuss the topic about source of finance. So first we see what is a source of finance. In our present day economy, finance is defined as the provision of money at the time when is required. Every enterprises, whether being big, medium or small, needs finance to carry on its operations and to achieve its target. In fact, finance is indispensable today. That is rightly said that it is a lifeblood of enterprises. Why do we need finance? We should ask question themselves why we need finance. Setting up a business, need to finance our day-to-day activities, expansion, research into new product, special situations such as fall in sales. Next we see what is a, next we are going to discuss what is a long-term financing. There are sources of finance that fulfill the financial requirements of the business for a longer period, which is more than 5 years. It includes equity shares, preference shares, loans, etc. This finance is generally used for finance fixed asset, expansion of companies, increasing facilities, construction of project on a large scale, acquisition of companies. Next we see source of long-term finance under shares, equity shares, preference shares. Shares, these are issued to the general public. This may be two types, equity, preference. Equity, such a shareholder has to share the profit and also bear the losses incurred by the company. Equity shareholders are regarded as a real owner of the company. Preference shares, a share which entitles a holder to a fixed dividend whose payment takes priority over that of ordinary share dividends. Next we see what is a debenture. Debenture represents borrowed capital. The debenture holders are creditors of the company. The debenture holders gets a fixed rate of interest as turn on his investment. Board of directors has the power of issue debentures. Then we see the retained earning. The company may not distribute the whole of its profit among its shareholders. It may retain a part of the profit and utilize its capital for further long-term activities. Next we are going to see what is a medium term finance. These are the source of finance that fulfill the financial requirement for more than 1 year but less than 5 years. Example of this source of loan from bank, public deposit, or loan from the financial institution. Loans from banks. Many industrial development banks, cooperative banks and commercial banks grant medium term loans for a period of 2 to 4 years of supporting the long-term capital investment by the company, that is a purchase of fixed asset, expansion, etc. Next we see loan from financial institution. There are many specialized financial institutions established by the central and state government which have a long-term loans at reasonable rates of interest for a long-term capital investment by the company. Public deposit. It implies the money received by a company through the deposit or loans collected from the public. Next, short-term finance. Short-term business finance are required to meet the day-to-day expenses. These funds are required less than a year. So, it is also known as a working capital finance. The purpose of short-term business as given below: purchase of raw material, paying wages to workers, payment of water and electricity charges. Under this you have the trade credit, short-term bank loan. Trade credit refers to the credit granted to manufacturers and traders by the suppliers of raw material, finished goods, components. Short-term bank loan, when a certain amount is advanced by the bank repayable after the specified 9 period, it is known as a bank loan. The period is usually short. Next we are going to see factoring. Factoring is a type of finance in which a business would sell its accounts receivable to the third party to meet its short-term liquidity needs. Under the transaction between two parties, the factor should pay amount due to the invoice under the commission basis. Commercial paper is defined as a short-term unsecured money market instrument used as a promissory note by big corporations having excellent credit rating. Thank you.